Yesterday, there were rumors in the media that Russia was ready to retaliate against the Russian oil price cap introduced by Western countries by banning the sale of oil to countries that had to join this initiative. Against this background, oil prices rose just above $80 per barrel. The asset's further bullish run is limited as these are just rumors, and the market is awaiting an official announcement. Moreover, among the measures voiced by the media, there is no ban on oil sales to countries that supported the restriction through intermediaries. If Moscow includes this item, oil quotes will immediately rush to at least $90 per barrel. The fact that some information has been leaked to the press indicates that an official statement will be made soon, probably before the end of this week. Thus, the market is unlikely to budge as traders have taken a wait-and-see approach in anticipation of the news. According to the trading chart, a surge in speculative activity allowed Brent crude oil futures to overcome the level of $80 per barrel. As a result, the market saw a local increase in the volume of long positions. If the quote consolidates above the control level of 80, it will most likely extend gains. At the same time, the asset may well come under pressure from fundamental factors. As soon as the media reported Russia's response to the oil price cap, the dollar left the 62 and 63 range and advanced to just above 63 rubles. A weaker ruble can be attributed to Moscow's retaliatory measures, adding to uncertainty and creating more confusion in the market. After all, they may turn the global energy market upside down. Uncertainty always drags the Russian currency down, so the dollar is expected to go up to 65 rubles in the near future. When the situation stabilizes and becomes clear, market participants will start assessing economic changes. A larger than expected decline in the US consumer inflation led to steep losses in the dollar. This in turn causes higher gold prices that once again showed the inverse correlation with the US currency. Today's macroeconomic calendar includes the Fed's final meeting this year, so the focus of traders will be on a speech by Jerome Powell. Despite an inevitable slowdown in interest rate hikes, the outcome of the meeting may disappoint investors and give way to rally in the dollar. There is a likelihood that the US Central Bank will keep raising its rate until the middle of next year and keep it elevated until 2024, whereas markets expect the regulator to deliver its first rate cut in the middle of 2023. If Jerome Powell even hits at such plans, gold will immediately start losing value and hit towards $1,700 per ounce. In the meantime, gold futures are trading amid increased speculative activity caused by US inflation data. The asset jumped by almost 2% to settle at $1,824.50. Despite overbought signals in the short-term timeframes, an uptrend remains intact. If the price rises above $1,820, it will most likely continue its advance. As for a bearish scenario, in a case the price fixes below $1,805, the asset may return below the $1,800 mark. Its further dynamic will depend on fundamental factors and market speculation. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.